Today is Tuesday, November the 21st, 3:20 a.m. New York time. So on Tuesday before the market opens, we go take a quick look at what happened last week. As you know, I like to skip Mondays just to make sure that I see what decisions other traders made over the weekend and what they actually did starting Monday morning all the way through the trading day. Let's go to our spreadsheet. I made some changes to it just so it looks a little bit friendlier. First here we have percentage signs, and I marked the indices that are down year to date in year to date change column. And as we can see, starting on when we took the numbers, beginning of November, the Dow was negative on the year and the Russell was down 7.25%. Other indices were positive. Yet one thing I noticed is that the Dow was the closest to its all-time high than any other index, regardless of the fact that it was the weakest for this year. So let's go to our charts and take a look. First one is NASDAQ. 1, 2, 3, fourth week, we are heading up. Last week was really interesting and uneventful because we gapped up. If we look on daily, we gapped up on Tuesday here and pretty much remained in the very, very close trading range right here. So here's our Tuesday gap trading range for the rest of the week. And again, looking at the weekly, we see that we had a big run up with a little pullback right here. And then basically in 3 weeks, we reversed and made back all the losses from the pullback. So let's go like this and see. The pullback started at the end of July. So this is August, September, October. We have 84 days of pullbacks. We give back 10% or 1,600 points on NASDAQ. And we erase all those losses in just 14 days. As you can see, this is our mark that we placed here on Tuesday, last Tuesday, and we have 5% to go. So I'll just leave it here for reference, and we know that we're getting closer to our all-time high. And all the money managers, all the investment guys that have not had a good payday since 2021 are eyeballing this area and looking forward to a nice, sweet, green Christmas for sure. Let's go to the S&P this trading week, this little thing here. This bar is the trading range for last week. Same thing, the S&P. After really 2 strong weeks, here's our Tuesday. We gap up and we trade in a very narrow range for the rest of the week, closing very close to its high. So let's go to the Dow. On the Dow, we have these levels. We are above those levels. So for now, we can remove them just to declutter our chart. And again, you want to put things on your chart, and if they don't help you, just remove them. And here, okay, Dow, as you can see here, we marked that it had 4% left to its all-time high. Here's our Tuesday. So we have 2 strong weeks, closing at the high, going out on Friday 2 weeks ago, coming in, trading Monday and Tuesday. Here's our gap up. Here's our gap up. We run up and then we trade in the really tight range. The Russell, again, we have great interest in the Russell because Russell has not been participating in this rally, and beginning of the month it was down 7.25% and 35% from its all-time high. In this case, Russell was a lagger, and it needs a separate video because a lot of things happened here. Last week was really tricky. It was a huge bear trap. Here's the beginning of the month for Russell. This point here, if we go year to date, we can see that Russell was negative on the year when we came in the beginning of this month, down about 7%. Then it rallied to unchanged territory, rejected that area and sold off. Here, however, it made a lower high, failing to come close to this area, and it rejected it strongly, and then it made a higher high that we can see right here. So the previous high that you want to see is the high before the sell-off. This happened really closely. You can go from this one or from this one, whichever one makes you feel better. But here's the area that we're talking about. From here we made lows, and I will do it like this. So we go lower high, lower low. We come into this, we test this previous high, we sell off, and we fail to test or break the low right here at 1645, right here down below. We stop at 1690, and from there we have a strong rally, a little pullback, and here's where we're sitting. So one question we were asking ourselves and continue to ask ourselves, if Russell can participate with the rally that the Nasdaq, the S&P, and now we can say the Dow enjoyed because it's coming really close to its all-time high. Russell clearly was the laggard for the year. So again, can it join? Can it go into the positive territory first? Question, and the second question is what it actually can do. And if we're looking at this picture, Russell has quite a long way to go up to reach its all-time high, set in November 2021. So again, it looks like everyone is making a bet on the Dow, on the S&P, and the Nasdaq to test at all-time highs. And we are looking for Russell 2000 to either join the party or stay down here and eventually get hammered when this rally is over. So our next stop is we're going to our stocks. Last week, Microsoft hit its all-time high. Nvidia was really close, testing that area. So let's look at what our stocks did. And again, here we have the strongest for the year. This is how they were year to date at the beginning of the month. I will not change this order until the next of the month because it just... So let's look at our stocks that we're following. All of them were positive at the beginning of this month. And they have quite a different distance to travel to their all-time highs when Nvidia is testing it and Microsoft is making all-time highs. Apple following really closely behind, then Google within 11%, which is really reachable for Google to make new all-time highs. And now we have these two, Tesla and Amazon, that have quite a distance to go, where we have seen Tesla traveling this much in a lot less than the 2 months that we have left before the end of the year. Again, as we talked before, you want to buy these stocks on pullbacks. Buying them on breakouts is extremely aggressive strategy. And in volatile stocks like Nvidia, I personally do not like doing it because, pullbacks of 15% are a normal thing for this stock. It's extremely volatile. If you weren't following it on the way down and trying to find a level where you can get in, if you're buying breakouts, just be prepared for huge pullbacks. A 10% pullback on a $500 stock would be $50. So if you catch the momentum and it shows you profit right off the bat, consider yourself lucky. But if you're looking to trade to win, you need to know how to get the prices that you want to get. And you need to know when you want to pay up. I think there is a good argument that could be made that since we're sitting here close towards the end of the year and the stock is making new highs, being a favorite, everybody's going to pile into Nvidia because money manager that does not have Nvidia in his or her portfolio, they will probably lose their job because when the stock is up 175%, and Nvidia and Apple would be the two, along with the Microsoft, that would be the three stocks that I think every money manager who's managing technology portfolios will have to show that they have this in their portfolio. But in any case, Nvidia, Microsoft, and Apple will be the stock in high demand for the end of the year. Now, all this can change because something may happen tomorrow, and this market that is looking to reach its all-time high can reverse and actually head back down. So then we change the story. But for now, our three indexes, Nasdaq, the Dow, the S&P, are looking to test their all-time highs, which are about 5% or less. And Nvidia is making its all-time highs. So if you want to add to Nvidia, you buy the breakouts, which is extremely aggressive and a risky way to go, or you wait for a pullback whenever it may come. So our next stop is Tesla. Very interesting. Look at Nasdaq these last 4 weeks going straight up, and look at Tesla not really going anywhere. If we take a look at this downtrend year to date, so even though it doesn't look good short term for Tesla, if we take a look from the beginning of the year, Tesla is up close to 90%. But if we look from its high, it is establishing a second downtrend. One can be seen on weekly. Here we go. our bigger picture, and if we look at the shorter picture, it seems like it's failing to reach new highs. Meanwhile, the indexes and other stocks are not only reaching new highs, they are reaching their all-time highs. So Tesla is our dog. There's not much to say about Tesla except for those people who were looking to add the stock to their portfolio and you really want to buy it. Here is our previous high from which it made this low of $111 beginning of this year. And then we have some ways to go to our 52-week high. So let's just take a look and see. Our 52-week high was set back in July. And we have 26% to go, say 25% to go to make it to our 52-week high. And if we're looking at our all-time high, we have about 80% to go. So Tesla is definitely the weakest one. So looking at it structurally, if this was the low, and this was our higher low, then it turns green. This was our lower high on the way down, but made a higher high. And again, here it looks like we are making another higher low. And one thing we need for this price to do is to, again, make it above this high. And if we can trade and close above this high, that would be second higher high. And we have established an upward trend. But for now, we wait and see what Tesla is going to do. Our next stop is Amazon. If we look at weekly, it just closed above its significant high. So let's go down to daily. We know that Amazon had its earnings. Wow, it beat by 60% on earnings. Expected 58 cents per share, reported 94. So if we look at daily, here is the day of the earnings. Amazon gaps up 5% and in the next 2 weeks continues to run up 22%. Again, Amazon is super strong. It has quite a long way to go to its all-time highs, but it just crossed and closed above its major supply area or major area that found sellers last time. And last time from this area, it sold off 154 days and lost 43%. Now it's closing above and we're looking at all-time highs of $186 a share or year to date. Here's a daily picture. 52-week highs right here. 144.85. Yesterday's close. 146. So we are at 52-week highs for Amazon. Stock is very strong. Here was our pullback, lasted 40 days. The stock pulled in 17% and in the next 10. And in the next 3 weeks, it recovered everything that it gave up from the previous pullback and it is making 52 weeks high. So aggressive traders are buying breakouts, but patient and conservative traders are waiting for another pullback. Our next stop is Google. Not much to say about Google, except it's testing this area from which it sold off previously. Here we have 14% pullback. And this is what it looks like for this whole year. We are up close to 60%. And we have about 10% to go to its all-time high. Now, Google has some work to do to make it to its 52-week high. I'll make it blue. We have about 3% that level. Our next stop is Microsoft. Microsoft made its all-time high last week. You could see that it was strong. You know, when the market was making lows, it really sat here and did not do much. And again, after this run up, there was no pullback, just consolidation right here in this area. So what we can see is that this rise pretty much straight up from beginning of this month is that this rise is becoming steeper. The pullbacks are non-existent. So are consolidations, if you can call these few days. You know, these are the inside days. We are going straight up through all-time highs. There is no resistance. There is no supply of stock up there. And Microsoft is the champion. I guess you're going to have to wait for another pullback. Apple is the rock star. The company comes out with the worst phone they have probably made in the history of the company. Everybody hates iPhone 15, yet it doesn't make any difference. And it doesn't change the fact Apple is such a great and profitable company that they can afford to have a flop like iPhone 15. Just look at this chart. Here is our last rally. From here, beginning of the year, January 3rd, we take off and we run for 204 days, going up 56%. No major pullbacks. Maybe right here is one. Anyone is here. But the stock ran up from 126 to 195. Look at the angle of the rise. Now look at the angle of our new rise. Let's make it green. For 1 second, look at the difference in the angle of attack. If somebody was here hungry buying this stock, now it seems like here the hungry is back buying it, but there are no sellers. When we looked at Apple last time, it had 4.95% to go to its highest. It's 188. Now it's 3. By looking at this picture, the only thing you can see is that There was a huge bear trap right here. Boom. All these shorts got sucked in. The stock took off before the earnings. It was 2 days before the earnings. If you were trading it, if you were watching it, you'd think like, why is Apple rallying before its numbers? Well, they rally into their numbers. The earnings come out. Nothing really special. Yet the stock keeps running straight up. So if you have Apple, enjoy it. If you don't, and if you decide to chase it and buy it up here, and for those who are here to trade to win, we're going to wait for a pullback. So, to recap, we are waiting for Tesla to make it to its previous high and trade above it. NVIDIA, it just broke out. If you're super aggressive and you can handle large volatility, you can go ahead and try your luck, but if you're here to trade to win, you have to wait for the next pullback. Have the position, enjoy the ride. Amazon made a higher high. If you're in it, enjoy the ride. If not, you wait for the pullback to test this area. Google is not so far off. It's 52-week highs, and that would be the first stop. Microsoft is a rock star. Microsoft is a rock star. All-time highs, and the rise is accelerating. And the angle of the rise is getting steeper. It would be nice to get a pullback, get into this thing. But if you have it, enjoy the ride. Almost stop before we go Bitcoin. Just look at this thing. A week ago, I talked about the fact that it is squeezing in here. It was squeezing. There were anytime there any kind of offers came in, they got bought up and they got bought up higher. Then it popped. We have a deep pullback. Test this area, rejects it. Huge candle up, huge candle down, and slowly grinding it up again. This is really strong. Here, this last few days looks like it's squeezing again. So let's see if Bitcoin can do this. Up here, followed by a deep pullback and another pop and a deep pullback. Something like perhaps.